Hello, this is Edmund Shing, and today in Weekly Global Strategy at BCS, we are going to look at value against momentum stocks. Firstly, why is momentum performing badly? Here we have on page 3 a chart of momentum against value. In black, the momentum stocks, which tend to perform better, but also which are more expensive. You can see over the last month has had a sharp fall, whereas value stocks here in yellow in the US have continued to perform relatively well and are still near their recent highs. Within momentum, there are three areas that have done particularly badly over the last month. Firstly, here in red, biotech stocks. Biotechnology has lost 13% on average over the last month. Secondly, here in green, social media stocks such as Facebook, LinkedIn and Twitter, which have lost 14% over the last month. And thirdly, recent IPOs here in black, which have lost 6% over the last month. What has done well over the last month are actually bonds. Here we have government bonds. The government bond ETF for the 10-year yield has done very well in Europe, in yellow, and down here in black, the same thing for the US. The 10-year government bond ETF in the US has performed very well over the last few months and is breaking out to new recent highs. So people want yield. This is very clear from page 7, where we have up here in black the high yield corporate bond index. You can see here total return making new highs. Again, people want those big interest payments. Here down as well, real estate in the form of real estate investment trusts have also done very well, picking up 11% total return since the end of last year. So people definitely want yield investments. Now, what is doing well? It is value. Here we have dividends, so one representation of value in both Europe, the Euro Stoxx Dividend 30 Index of 30 high dividend yielding companies, and down here in black, the American High Dividend Yield Index. In both cases, they are at or near to recent highs. So dividend stocks are still very popular in the US and Europe. Here we can look on page 10 at a very popular high yield sector, which is the utility sector. Both in the US in yellow and in Europe in black, the utility sector, including electricity and gas distribution companies, are near to recent highs or at recent highs. So utilities, which are a boring sector, seem to be very popular at the moment. Within technology, you can see that the boring, old, dependable Microsoft here in black is actually now outperforming this sexy, expensive social media stock, Facebook here in yellow, which has had a big fall, whereas the dividend-paying Microsoft continues to grind to new highs. So this is something that's interesting, that old tech, which pays dividends and has dependable cash flows, may actually be more attractive right now than the high-flying social media stocks. To summarize, momentum stocks have done very badly of late, and this shows you that what goes up quickly can also come down quickly. Bonds are very popular. People want yield. In particular, the high yield corporate bond index in the US and also real estate have done very well. We also note that the utility sector, normally a boring but high yielding sector, has also performed very well. And finally, within technology, you should prefer old technology which pays dividends like Microsoft to the, in quotes, new technology like Facebook or Twitter. This is Edmund Shing from BCS saying thank you for watching.